going to pay it in the ratio of 50. So in the first month we are paying 50%, in the next month we pay 20%, and in the coming month we pay a quarter. So once you calculate that properly, 50% of 50 million is 25 million, and 25% of 50 million is, let me see, and 25% of 50 million, oh sorry, rather 5 million. The business acquired goods on credit worth 5 million, so 50% is 2,500,000, and 25% is 1,250,000, and a quarter of that very amount is 1,250,000. So if you are to calculate this correctly, in January you should have your 2,500,000. In February you should have your 1,250,000. In March you should have your 1,250,000, and in April you should record nothing. This is because we're given three ratios: the ratio of 50% to 25% to a quarter. This indicates that the money was split three-way. So our goods on credit, the goods we purchased on credit as a business, have been distributed in that way. And we made the payments within the accounting period beginning with the month of purchase. So our month of purchase was January, which made us evenly, as negotiated by the question, divide the amount in January, February, March, and April. So as I said, the calculator is very important at this part of the calculation. So keep your calculator close, because we are reaching the end of the question. So as you can see, I have recorded my goods on credit, so I have moved on to cash purchases. So my cash purchases says the business made monthly cash purchases that are projected at 40 million. So 40 millions every month. This is the fifth transaction if you look closely. So moving on, the business paid salaries. So monthly salaries for 20 workers are projected at 400,000. So for 20 workers, each received 400,000, but 4 workers are to be terminated without replacement in the month of March. So in March, we are to let go of 4 workers. So as you can see, I have filled in the 8 millions for the first 3 months up to March, because when you're fired, when you're terminated, the month in which you've been terminated, you are paid. So all those 3 months, January, February, and March, people received money, 8 million. Then April, 6,400,000 after termination of the 4 workers. So I multiplied the amount each would receive times the 20 workers to obtain the 8 million. So now we're moving on to loan repayment. So as I told you, in the next video I'll be teaching loan repayment schedules. So right now I have calculated how much money will be repaid on the loan. So we'll receive an interest of 600,000. We'll pay an interest of 600,000. So the business acquired a loan of 30 million, and on that loan we shall pay back 600,000 every month. So dividing that loan three way gives us 30 million. So each month we are paying 10,600,000. So for January, February, and March, 10,600,000, 10,600,000, and 10,600,000. So this is the fixed installment method for loan repayment. I will teach it in the next coming video. So the next cash outflow is taxes. So if you read closely from the question, It says the following expenses were incurred. Taxes for all the 4 months, 20 million shillings. So all the 4 months we paid 20 million. So we divide 20 million evenly in 4. So moving on, advertising. So advertising expenses paid every fortnight, 500,000. So a month has 2 fortnights. So 500,000 multiplied by 2 would give you 1 million for every month. So every month we record 1 million. Moving on, we have the next expense as monthly transport bill. So our monthly transport bill is 800,000. So record. Oh, sorry, electricity bill came first. So we have electricity bills. Electricity bills for the first quarter of the year 24 as 1,800,000. So we're going to divide 1,800,000 divide by 4 months. Sorry, divide by 3, because a quarter of a year is 3 months. So 600,000 in 3 months. So those are all the transactions that are to be filled in our cash flow statement. So I want to find the total cash outflows. So for the month of January, we calculate the total cash outflow, and we should get if I'm correct, we should get about 67,700,000 as our total cash outflows. Yes, 67,700,000 as our cash outflows. So then we calculate our net cash position. Our net cash position should be, we should obtain this from subtracting the total cash inflows minus the total cash outflows. This should give us 118,200,000. So we go ahead and move on. So we move our net cash position as the balance breakdown in the next month. So our next month is February. So we move our 118,200,000 as the balance breakdown in the next month of February. So we are going to add our balance breakdown plus the rent income plus the cash sales plus the credit sales and the donation to get our total cash inflows for the month of February. So once that is done, we come and calculate our total cash outflows. So we are going to add everything in the cash outflow column. That is our goods on credit, our cash purchases, the salaries, the loan repayments, the taxes, the advertising expenses, and the electricity bills. If this is done well, we should get a cash outflow of 66,450,000. So to obtain our net cash position, we are going to subtract our cash inflow minus our cash outflow. So this should give us 134,750,000. So our net cash position is carried on as the balance brought down to the next month, which is 134,750,000. So we're going to add this plus the total cash plus all the cash inflows plus the rent income, the cash sales, the credit sales, the loan acquired, and the donations. If this is calculated properly, it should give us 225,870,000. So moving on, we're going to find our cash outflows. So we're going to add our goods on credit, our cash purchases, the salaries, loan repayment, taxes, advertising expenses, electricity bills, to obtain a total cash outflow of 66,450,000. So when we subtract the cash inflows minus the cash outflows, we get 159,420,000. So we take this to the next month as our balance breakdown, our 159,420,000. So when we get this, we calculate and get the cash inflows for that month as well. So we add the balance breakdown plus the rent income plus cash sales plus credit sales, the loan acquired, and the donations to get our total cash inflows for the month of April. This is to give us 252,820,000. 252,820,000. So moving on, we're going to calculate our total cash outflows. So we are going to add our goods on credit, our cash purchases, salaries, loan repayments, taxes, advertising expenses, and electricity bill to give us our total cash outflows. So this will give us 52,400,000. So after obtaining this, we're going to obtain our net cash position by subtracting 252,820,000 minus 52,400,000 to give us 200,420,000. So that is our cash flow statement, everybody. Thank you for watching till the end of this video. So please subscribe, like, and leave a comment. And if you would like to know more about cash flow statements, please comment cash flow statements. So thank you for watching, and goodbye.